Special payrolls often happen during year-end. Those may include year-end bonuses, profit-sharing plans, or commissions. A special payroll is very similar to a regular payroll, but there are some nuances that will be discussed in this video. Just like a normal payroll, click Add Payroll button. Then, once redirected to the control screen, you'll likely want to change some of the options on this screen. If this payroll is to be run and processed separately than the regular payroll, then you will likely want to change the period start, end, and check date in the general section at the top. This is because the system is auto-applying the dates of your next normal payroll cycle. The other thing to change is the payroll run type. You'll want to change that from normal payroll to special payroll no salary. This will ensure that your salaried employees' normal salaries will not also be included in the payroll run so as to not double pay them. If you plan to just include your year-end pay and adjustments with a regular payroll, then you can skip changing the start, end, and check dates, as well as the payroll run type. The next section that you may want to change is the period control. Because the system would have populated your next check dates based on your normal payroll cycle, you'll want to uncheck any boxes that are marked in the first of or last of sections. Again, if you plan to just include your year-end pay and adjustments with a regular payroll, then you can skip modifying this section. The next section to review is the deduction section. If doing a separate payroll for bonuses or commissions, unschedule any deductions that should not come out in this pay. Deductions that are often unscheduled are health or medical premiums. If your company has a retirement policy, make sure to refer to the policy about whether or not to deduct this on special payrolls, such as bonuses. Also, refer to state laws about taking child support deductions on lump sum bonuses for employees who are in arrears on making payments. In the next section, direct deposits, the normal checks refers to the first or primary paycheck in the payroll run, and the subchecks refers to any checks in addition to the primary. So, if you're running a separate payroll cycle for this special payroll, then the pay will likely be considered a normal check. If including your supplemental payments within a regular payroll run, you can mark that pay as a subcheck on the pay data grid so that it becomes a separate pay stub that is taxed separately and can even be paid out differently, which will be talked about next. In the drop-down menu for each, use the All option to split the payment among whatever bank accounts the employee has on file. Use the 100% net option to send the entire check to the employee's main account listed on file as 100% of net. And use the None option to produce paper checks. If you wish to use a flat percentage to tax any supplemental pays, click on All Checks to apply the percentage to all payments in the payroll run. Only use this if you're running a separate payroll cycle. However, if you're just attaching any supplemental payments to a regular payroll, select the Subchecks option to apply only to those additional checks. Then, use the default 2020 IRS supplemental rate or modify it as needed per IRS guidelines. To look at the next few nuances of a special payroll, go to the pay data grid on the left and then select Grid. If this entire payroll is a separate payroll, simply enter the pay amounts into the appropriate earning column. If including the supplemental pay with a regular payroll, enter any pay amounts into the appropriate column, and then enter any characters into the small white sub box. You may have to click the C button to copy a line in order to produce that second line. However, make sure some character is entered into the sub box, otherwise that pay will simply be added into employee's regular paycheck. On this screen, there is another tax option on the pay data grid that can be used so that the employee is not over-withheld in taxes. Click on the O button to the left of the employee's name and then select an option from the Number of Pays drop-down menu to force the system to view the payment as spread over that larger time period in order to take out fewer taxes. The last tool we will discuss is the gross up calculator. You may be asked to gross up an employee's pay so that the company will cover taxes in order to produce an expected net check. You can find our gross up tool by clicking on the paycheck calculator and then selecting the Looking for Gross Up link, click here link over on the right-hand side. Complete all the information in the top section by selecting the employee, entering the desired net amount, and selecting 2020 as the year. Also note that you can change the pay frequency and use the number of pays drop-down menu that was discussed earlier. Verify the amounts and click the Create button in the bottom right to create a paycheck or save an adjustment if the payment has already been made or will be made outside of Dominion.